get in a very big voice which we have planned for you. We've got John Praveen. He's a very big fund manager, global fund manager, have been all over the place in the last 3-decade career, in top of the line, blue-blooded investing companies across the world. And today he's joining us all the way from New Jersey to talk about Indian markets. John, thanks so much for joining us on ET Now today. First, let's start by understanding your thought on the emerging market setup as a whole and where does India stack in. So much happening around, but how does the valuation look?
If you just step back for a minute into 2021, emerging markets as a whole underperformed the developed markets. So while the US was up over 20%, Europe over 10%, emerging markets as a whole underperformed. And there were several reasons. One of them was the biggest reason was, of course, the big drag from China. There were a lot of issues in China, a slowdown, property, real estate sector problems. And then there was a lot of regulatory overreach on the part of the Chinese regulators that caused a negative impact upon emerging markets as a whole. India did stood out as one of the better performing emerging markets. In fact, actually one of the best performing emerging markets with over 20% gains for the major indices in India. Now, looking ahead, we are now in a slightly different into 2022. We are in a different landscape. The Fed, from March of 2020 till now, we had a lot of liquidity because of the central bank asset purchases, QE, by the US Fed, by the ECB and other central banks, and ultra low interest rates. We are now reaching the end of that liquidity surge or that liquidity tidal wave. The Fed is on track to start tapering QE purchases. The ECB may do it sometime next year, and we might also see rate increases. In fact, there were rate increases by many emerging central banks and by some developed central banks. So this era of ultra low interest rates and abundant liquidity is coming to an end, and that will probably pose some challenges to emerging markets, especially that depend upon FII flows and things of that kind, because liquidity drives markets to some extent apart from earnings, but liquidity is a big driver. And to the extent that liquidity is going to begin to slow down or ebb, or that the liquidity tidal wave will ebb, we will probably see some impact upon emerging markets. So what you need now is a stronger growth and then stronger earnings. So we are probably transitioning from a liquidity-driven market to a earnings and economic growth-driven market.
John, how does India look right now after this, kind of 10% correction which has happened in Indian markets? Its first most meaningful correction in almost 18-20 months. Do you think that correction is over, or are we vulnerable to revisit the recent lows again?
So in the near term, there are challenges to not only to India but to all markets because of a new wild card, which is the Omicron variant of the COVID-19 virus. So that has caused a lot of uncertainty, and until we are clear about how dangerous this virus is and whether the existing vaccines are able to provide immunity against this new Omicron variant, until that is clear, and we don't have that data as yet because the scientists and the researchers and the WHO and all are investigating that. We will know in a few weeks. Right now, the only thing we know is that the the virus is more spreads faster than Delta, but whether it is more dangerous than Delta, we don't know that. So until that is clear, we will probably there will be some clouds on the Indian market and upon global markets as a whole, as we saw for the in the US itself after Thanksgiving in late November. Of course, in the last 2 days we have had a little bit of a relief rally. So so it is all going to depend whether this correction is over or whether it has further to run. And that will probably depend upon more news about the Omicron variant, whether it is more dangerous and whether the vaccines can contain it. That is one. The second thing is, so if we have a situation, if the news comes out in the next couple of days that while the Omicron is spreads faster than Delta, it is not as serious as Delta, we will probably see a relief rally in India and in other markets. But if the news is that this variant is more dangerous and that the existing vaccines are not able to provide full immunity, then we will probably see the correction running a little further. The other aspect is Fed beginning to taper. More recently, Fed Chair Powell indicated that the Fed has already announced that they will taper. And so if the Fed actually goes ahead with a faster taper of its QE asset purchases, then we might probably see at least in the short term a little further correction in emerging markets as a whole.
How are you analyzing the earnings cycle, John, as far as the Indian universe is concerned of companies? And does it look like the visibility 12, 24 months far out? How convinced are you versus the valuation these stocks are trading at right now?
Yeah, so the valuations for India and actually for global markets as a whole have risen because we have had a huge rally in markets in 2020 and also in 2021. So that has made valuations much richer or more expensive relative to their 10-year or 20-year history and India relative to other emerging markets. So India is trading at a premium to other emerging markets and to its own history, just as the US is also trading at a premium to other developed markets and to its own history. So, I mean, in that sense, there is a bit, you can draw a comparison between India and the United States in terms about that they are expensive. But then if the earnings continue to grow, then the valuations will probably justify the valuation. So, for example, we are probably not going to see the kind of strong earnings that we saw in 2021 either in the US or in India, because I mean we had very, very strong earnings. We may not have a repeat of the same kind of strong earnings. We might probably see earnings more in the 15 to 20% range rather than in the 20 to 30% range. So, and then to the extent that we have this digitization wave, and then companies going more digital and increasing use of technology, that could probably provide stronger earnings to those firms which are on the forefront of the digitization wave or the EV wave. So I think that you have to be a little more selective in terms about which themes and I think that we'll probably see some companies and some sectors having much stronger earnings than the market as a whole.
John, lastly, before I let you go, what kind of stocks and sectors look attractive to you if one were to play this story which you're talking about next couple of months here in India?
So in the case of India, I think the industrial sector, the consumer sector, especially, and then the healthcare sector, and the fintech sector. These are the sectors that I think that will probably do quite well. So we are seeing, if you look at the landscape globally and in India. So those companies that are in the forefront of digitization, EVs, and in the green technology, those companies will probably continue to do very well because they're, and then also AI, artificial intelligence, that is becoming also a very big theme. So those companies in India that are able to capitalize on that, those are the themes, those are the sectors that are probably likely to do well in India, and those are the sectors that we like in India. The industrials, maybe some of the infrastructure sectors, because the government is pushing infrastructure, and then those companies that are able to take advantage of the productivity linked incentives, PLI, those companies that are able to take advantage of that, those are the sectors and the companies that will probably do quite well. And those are the companies that are transforming themselves. So just to give you one example. So in the case of in the United States, many of the auto companies like the Ford, the GM and all, they were doing very badly for the last several years. For decades, they were doing badly. But then over the last 2 years, they have rediscovered themselves and then started going on the EV track. And then by rediscovering themselves, they have been able to capture the market's imagination and attract a lot of inflows into those stocks. So those companies in India that are also reinventing themselves away from their existing core business into new businesses, into the technology business. So those are the companies that will probably do well. Those that are in existing industries but are transforming themselves into newer, transforming themselves into the technology space, the biotech space, and the fintech space.
All right, John, thanks so much for joining us on the show. Always great chatting with you.